So, Dr. Michael, we see asset management firms like BlackRock setting foot in the UAE. So, BlackRock, for example, has opened an office with Abu Dhabi Global Markets, and there are others as well. So, will that make it easier for them to spot Dubai real estate market?
I think where that adds value for or adds appetite for institutions is that there's an advisory arm here. So, again, if we think about the risk, build-up of risk in a evaluation of a property, then anything unknown, whether it's the way legislation operates in the markets in the UAE, how does that differ from the English legal system, which is one of the most well-established ones that, again, rightly or wrongly, the world sort of conforms to. When you've got advisors on the ground who can advise those international clients on those aspects, then again you're compressing the risk. And when you start to compress risk, whether it's the lease, the legal structures, any unknowns about the way in which land reverts to different owners through that life journey, that means that the yield, the initial yield, the yield that the investor buys and acquires that property gets compressed. So we've seen that evolution, albeit through a sparse number of transactions. We've probably gone from sort of a 9% yield down to something sub 6% for commercial assets. And that is being driven by all of the things that we've spoken about so far, be it data, be it the type of product, be it the operational corporate occupier trends that are going on.
So, Dr. Michael, institutional investors usually, as you mentioned in your book, favor commercial assets. But if you look at Dubai market, it's mainly dominated by the residential market. However, at the same time, as you mentioned, going back to sustainability, we see a lot of communities, going for certifications which involve ESG, like LEED Platinum certification or pre-certification.
Yep.
We've seen the likes of Expo City, of Miras, the Acres. Again, will that make it for the institutional investors more appealing to invest in residential?
So again, we're starting to see this global shift in institutional money. So maybe 20 or 30 years ago, institutions focused on retail, shops, malls, etc., offices and industrial. So fairly, boxed into those three sectors. Well, we know there's disruption in retail through online shopping. So that's a risk in institutional money. The way in which we operate in the office world is changing with hybrid working, albeit again depends, but there's a risk there. So institutions are diversifying into residential globally, something that they've historically not been too interested in. But when you've got strong fundamentals, and Dubai, I would say, has strong residential fundamentals, a growing population, an economic growth that's larger than Western markets, then that would be attractive. So if a fund bought a tower or a block of apartments in a new master community, I don't see an issue with that. And where the wins could be with that is that it actually offers a better service in those buildings. So institutions who buy a whole tower or a whole block of apartments can do more add value management to it. So managing co-working spaces,
making sure the standard is consistent. So you know what to expect from.
And also offering, going back to stability of cash flow, offering the rents at a slightly subsidised rate, so that they get full occupancy or as full as possible occupancy, and there's less voids and there's a more predictable cash flow. An institution is going to be able to weather that and manage that much better than an individual. So I think Dubai is not just the commercial, as you say. There is an opportunity for funds to look at ways in which, and that's probably where we'll see an evolution with the developers interacting with institutions to sell large blocks or large buildings within communities to institutions to get them managed professionally. Because of course we all have experience with individual. There's a potluck, isn't there? You get good landlords, you get challenging landlords.
Tell me about it.
So I think when an institution does it, then there's there's more confidence from the tenant. You can attract a much more stable cash flow in that. And I wouldn't be surprised if we started to see that as well. We move away from just off-plan selling to individual investors, and we start large institutions will buy the building and say, we want to manage that. This is a great strategic location, and Dubai has the plan to build the population, so we're confident to buy that asset.
Or Dubai has a target of 20 billion dirhams of REITs. Do you see them going upstream, becoming popular and pushing prices up?
There's definitely growth and demand for them. And it comes back to what I'm saying about the leases, the fundamental structures in these buildings, the opportunity for organisations to actually asset manage, and that's where the value of REITs comes in, is that they've taken an asset, a stranded asset, and they've managed it and improved the cash flow and improved the value. So that's where you're going to get the value driver in a REIT product. I think we'll see more REITs. I think we're already starting to hear conversations about having different forms of REITs. But for me, like if I could buy, I'm not saying Iman need to do this, but if I could buy Dubai, the income from Dubai more, I'd sign up tomorrow. So you've got to look at what the assets in the REIT, and what's the quality of those assets before you make the decision. And can I get that from elsewhere? Emaar Malls was an example of that historically, where they subdivided the operations into malls development, and so on. So Emaar Malls gave individual investors an opportunity to buy into their retail strategy. So I would ask as an investor, would I prefer to do that and have access to a wide range of retail in the market versus one or two souks or retail spaces that the REIT had? So you've got to be quite specific about where you're getting the value and how it's being managed.
Dr. Michael, what's your forecast for institutional investors, coming into Dubai overall? How do you see it, for the next 2-3 years?
Yeah, you don't need to go far. You look around us here where we are, you see the types of assets that are in the major free zone. So, Dubai Internet City,
You've got the Visa building.
You've got Visa, you've got Google, you've got Sweden. You've got these structures. I mean, the Edge building is an example of something that's been traded as by an institution. So there's an opportunity, there's an exit plan for those buildings if that was something that governments wanted to do. And I think there would be appeal, because around us you've got businesses taking on longer leases, staying here longer. They're strong assets. They're LEED Gold, LEED Platinum buildings. They tick all those boxes that we've discussed. So I think as the development cycle starts to build these types of products, then it will attract. It's a good exit plan for a building. And we've got that example with ICD Brookfield. Exactly. A partnership between Brookfield and ICD developed a fantastic tower. Sort of one-of-a-kind tower.
It's an icon in the IFC.
Leased it up through the hardest commercial market during COVID, but it's fully leased. Rental growth has been significant during that period of time, and the exit plan, as we start to hear in news and media, is different funds internationally are saying we want to buy a stake in that, or we want to acquire a stake of that building. So it's testament to the opportunities that exist. There is interest for the right product.
I think there's a lot of buzz, if I get it correctly. There's a lot of buzz happening as we speak.
Yeah, and I think the development cycle that we're seeing now will translate into more institutional, if it's planned as it is being planned, to attract from the different levels, from the developer led through government initiatives, government incentives. It will drive. The strategy is very clear. And I think the maturity of Dubai will be supporting that economic growth, which then trickles down into the residential sector. So, the commercial sector is the lifeblood of a residential market. So they work in tandem with each other.
So, and that was another question, that it will have a ripple effect.
Yes.
More commercial means more residential.
Yeah,
so we'll see a ripple effect.
More confidence generally in the market, less priced in risk. The risk is less. We've got longer time series now to work with to draw decisions on. We've got legal structures that are clearer than they were historically. It all gives more confidence, and it compresses the risk that I then factor in when I buy. So we're seeing that in, as I said, in commercial from 9 to 6, residential equally, post GFC it was probably 10% yields. Now you're in the 5-6% yields for residential assets as well. So people have more confidence in buying here. There's longer term plans for the investments, and if that's supported by good financing, bank financing and so on, then that will also support the evolution of prices and price growth in the future. You've got to have a strong finance system to support the acquisitions and decisions of these investors. Yeah.